video. We'll put a link right here, but we're going to start right where we left off at step number 3. Is the United States turning into Venezuela? Just as a recap, in the previous video, we talked about the unemployment rate getting up to 30% for a variety of reasons, while the stock market continues to go up and up and up because of all the stimulus programs from the Fed and the government. So the stock market continues to go up. This creates a lot of recency bias and FOMO, fear of missing out. We have to consider human psychology. That's really what it looks like from a 30,000 foot level. But let's dive into the details so we can really start to put the pieces of the puzzle together. Let's introduce the characters. We have Davy and we have White Collar Wayne. Of course, the Fed is monetizing all of the government debt. They're printing up funny money like it's going out of style. So the government issues debt. It goes onto the Fed's balance sheet. The Fed gives the government the newly printed money so your drunk, insolvent Uncle Sam can make it rain down on the real economy with all of this funny money that's been printed up by the Fed. This comes in the form of massive amounts of stimulus. It's going to such an extreme, we talked about in the last video, how the government is actually considering giving tax credits of $4,000 for people just to take a vacation. So Davy sees all this money that he's getting from the government, and he says, listen, if I go on unemployment, I'm going to make a lot more than I'm making at my stupid job working at XYZ Widget. So Davy gives his 2 weeks notice. In fact, Davy most likely would quit on the spot. So he goes down into his house. Now he's working from home, collecting the money from your drunk, insolvent Uncle Sam that he is getting from the Fed printing up funny money and taking bank reserves to infinity and beyond. So Davy becomes Davy, the day trader, which I'm sure most of you could have guessed that already. So let's see what happens when Davy goes from working at XYZ Widget to becoming Davy, the day trader. He was making $50,000 a year, most likely paying no income tax. As we know, 44% of Americans, in fact, when it goes into a recession, it often goes to 50%, don't pay any income tax at all. I understand their income taxes if you make up to $50,000, but when you include the deductions and the way the tax code is set up, usually people making $50,000 a year as a household aren't paying any income tax whatsoever. So we'll assume he's paying no income tax. He wasn't paying any capital gains tax. He really didn't have any assets, no stocks, but he was paying payroll tax. That's when he was working at XYZ Widget. But now that he's Davy the day trader, he's maybe getting $40,000 from your drunk, insolvent Uncle Sam, but he's making 15 grand a year by trading stocks, because as we all know, the stock market only goes up. It's gone to 30,000, 35,000, 40,000 potentially. And we've got all these people getting these stimulus checks with their human psychology, the recency bias and fear of missing out, just driving it higher and higher and higher. It's no different than any other bubble before. So in this scenario, he's still paying no income tax, but what has changed is he isn't paying payroll tax, and he might be paying some capital gains. So let's move over to the other side of the whiteboard and explore how a situation looks for another type of worker. We'll call him White Collar Wayne. ABC Widget, because of the cerveza sickness, is really having to slash jobs. So they give the pink slip to Wayne. This is why he's really looking pissed off and he's really bummed out, doesn't know what he's going to do. So he goes down to his house, but he sees that he's getting 40 grand a year, just like Davy, from your drunk, insolvent Uncle Sam and all these unemployment benefits and stimulus packages. So he, of course, has recency bias and FOMO as well. All of his buddies are making a killing in the stock market. So what does he do? He becomes Wayne, the day trader. So how does his situation change? He was making $100,000 a year, working at ABC Widget, paying income taxes, and most likely some capital gains. He probably had a small stock portfolio or 401k, and he was also paying payroll taxes. But now he's getting the $40,000 a year plus the $15,000. We'll say he's got the same setup as Davey, but he's not paying any income tax whatsoever. Nor is he paying payroll tax, but he's most likely still paying a little bit of capital gains. And let's not forget, when I'm talking about the capital gains, you can see that's the one tax that both of them are paying. It's not like that would go up enough to balance out the loss the government has by no income tax and no payroll tax. Let's think this through a little more. In the middle, we have Fat Cat Carl. He's the one that was rich. He owned all the stocks that Davey and Wayne are buying. So as they're trading from their house, posting to Instagram, Twitter, you name it, Fat Cat Carl is selling them shares. They are giving Carl all the money they're getting from the government. But the difference is the capital gains tax being paid on the shares is changing substantially. The capital gains tax is progressive, just like the income tax. So if Carl is paying a 20% capital gains tax, we'll call it long-term cap gains, that means Davey or Wayne could be paying 15% or as little as 0%. Whoa, time out. Let's not forget what happened to ABC Widget and XYZ Widget. Because the cerveza sickness has hit the economy so hard, ABC Widget goes out of business. And XYZ Widget goes out of business as well because all their employees left because they're being paid a lot more by the government to stay home. So we go from an output of 100,000 widgets per year down to 0. This means fewer goods and services, or in this case goods, in the overall economy. Exact same thing happens at ABC Widget. So the main takeaway from this part of the step is the tax rate being paid on the shares appreciating is going down significantly. There's no income tax being paid, no payroll tax being paid, and the amount of goods and services being produced by the entire economy is shrinking dramatically. Let's unpack this a little further. We have fewer goods and services being produced. Same amount of demand for the goods you buy on a daily basis means prices are going up, inflation. At the same time, tax revenue is plummeting. And when I mean plummeting, I mean dropping off a cliff. Editor, throw up the chart. We can see that payroll taxes represent almost 50% of the entire revenue going to the federal government. So even if you want to argue they might not be paying income tax on the unemployment checks and stimulus checks, the amount of revenue lost through payroll taxes and capital gains would be a knockout punch to the budget of the government. And you may be saying to yourself, wait a minute, George, I always thought that inflation was good for people and entities that hold a lot of debt. And since the government is the largest debtor of all time, isn't the simple fact we have inflation good for the government? Won't it make it easier for them to pay down their debt? Not necessarily. What I've shown you is a very realistic scenario where you could have inflation while at the same time the tax revenues are going down. And the only reason that inflation would be good for the government is if tax revenues were actually going up, even if they're only going up in nominal terms. The bottom line is there's a lot of nuance to inflation and deflation, as well as a lot of other things in macro. I can sit here and argue in one video for the dollar going down. The very next day, I can argue for the dollar going up, as all you guys know from watching my videos. And I can take it a step further and I can argue for the stock market going down, the stock market going up. The whole point of this channel isn't to convince you of one thing or the other. It's to convince you to think for yourself. All of this requires a lot of thought. And we are going into some dangerous times right now where you can survive, you can thrive, or you're going to be a victim. Oh, but wait, there is more. What we've outlined in this entire video really creates a doom vortex. And if you're wondering, yes, now is definitely stiff drink time. The government comes in, prints all this funny money, increases deficits, and sends out stimulus checks. This distorts the economy in a huge way. We have fewer goods and services being produced in the economy. This creates lower tax revenue, but it also could create inflation. This forces the government to print even more money, increase the size of the deficits and the stimulus checks that are going out, which distorts the economy even further, taking us right back into this doom feedback loop. Now let's go back to the original question, is the United States turning Venezuelan? We have to understand the root problem they had that led to the hyperinflation. You can talk about dollar-denominated debt and all these other things, but the bottom line is they were printing way too much money relative to the amount of stuff they were producing in the economy, which was shrinking dramatically. They were a one-trick pony. Their entire economy was based on the production of oil. So when oil prices crashed, it forced the government to print even more money, which exacerbated the problem of inflation, turning it into hyperinflation. Let's look at this through the lens of the United States. Are we printing up way too much money compared to the amount of goods and services we're creating? And will it most likely get worse in the future? Obvious answer there is yes. Is our entire economy based on oil? Are we a one-trick pony? Not based on oil, but it's definitely based on one thing and one thing only right now, and that is the stock market. So the United States isn't Venezuelan right now, but we're doing all the exact same things that collapsed their economy and led them down the path to hyperinflation. For more content that'll help you build wealth and thrive in a world of out-of-control central banks and big governments, check out this playlist right here, and I will see you on the next video.